SentinelOne just released their latest quarterly figures and it was a double beat, a beat across the board for the quarter, and guidance was also better than expected. Now, despite all of that, at the time of making this video, there is still the call that has to happen, so at the end I'll edit and add some crucial information if they give us that during the call, because currently the stock is down close to 2%. Now, usually when you have a double beat and guidance is even better, you would think that the stock would go up. Well, despite the stock being down still close to 10% year to date, despite this being a fast growing company, with a market cap of $7.7 billion, expected to grow sales by 31% in fiscal year 25, 26% year-over-year growth in fiscal year 26, then another 24% growth in fiscal year 2027. So this is a fast growing company. But, of course, we were all expecting maybe better guidance because of what has happened with Crowdstrike. Because of what has happened with Crowdstrike, maybe the market thought, look, maybe SentinelOne would have attracted more customers or is currently in discussions with more customers, and so guidance would have been raised maybe a little bit more. That's why it's crucial to hear what they have to say during the earnings call. So first part of this video, or the majority of this video, is going to be reviewing the earnings report, a couple of things that were mentioned there as well, and a little announcement from Crowdstrike, which is purely a PR play because, well, Crowdstrike is reporting earnings Wednesday after hours. One of their competitors is reporting right now, so you release something nice during the day. Anyways, before jumping into all of that, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start with the Crowdstrike announcement here. So they said Crowdstrike aims to secure the future of generative AI innovation in collaboration with NVIDIA. So NVIDIA released or announced their NVIDIA NIM agent blueprints. So of course, same day, Crowdstrike came out and said they announced it's providing additional safeguards for NVIDIA NIM agent blueprints with the AI native Crowdstrike Falcon cybersecurity platform to help developers securely leverage open source foundational models and accelerate generative AI innovation. Building enterprise generative AI applications is a complex, multi-step process. Enterprises need blueprints for standard generative AI workflows, including customer service chatbots, retrieval augmented generation, and drug discovery to streamline the development process. The security of these models and underlying data is critical to ensuring the performance and integrity of generative AI applications. Okay, nice announcements. Both of these companies are, by the way, reporting on Wednesday after the market closes. Now, before looking at what SentinelOne has reported, I just want to show you something incredible. So this was the Worldwide Modern Endpoint Security 2023 share snapshot. Number one, the market share leader is Microsoft at 25.8%, growing 40.7% year over year. Number two is Crowdstrike here at 18.1%, growing growing 25% year over year. If we look at SentinelOne, that's around, let's say, 4% or so, but they grew the fastest out of everyone at 43.1%. But just so you know, maybe you didn't know, but yeah, Microsoft and cybersecurity, it's a big deal and they're growing quite fast. So yes, for all of us that are asking ourselves every time, why not just stick with big tech companies? To be honest, every single time I see something new and I'm like, you know what, maybe we are right. Maybe we should just stick with big tech companies because they dominate. Even in industries where you think they don't dominate, they dominate and they grow faster than big players. Crazy. Anyways, moving on here to the first, let's say, shot fired at Crowdstrike here. The latest global IT outage highlights the significance of platform architectures, process controls, and building resilient security operations. The scale and disruption caused by this incident is a stark reminder of the risk posed by vendor concentration. The cost of protection should never exceed the consequences of a breach. This was an avoidable incident that was born out of risk-prone software deployment practices and a fragile product architecture. In the cybersecurity industry, we share a fundamental goal to deliver protection and reliability. Partners and customers expect us to deliver on this promise. A key lesson our industry has learned is the importance of product architecture. Understandably, customers and partners are now looking for better platform architectures and building more resilient cyber defenses. Some of the largest enterprises in the world are now evaluating and appreciating the Singularity platform's breadth and superiority relative to the competitive offerings, and they are positively surprised. As a result, customer interest in our platform and AI-based security has distinctly risen. So when you hear all of that, of course, you would have thought that guidance would have been a bit higher. But like I said, maybe they'll tell us something during the call. Continuing here, a couple of comments from the CEO and CFO. Based on strong execution and broad-based demand, SentinelOne delivered exceptional results with industry-leading growth and our first ever quarter of positive net income and earnings per share. We're seeing a distinct rise in customer interest and appreciation for the advantages of our patented AI-powered Singularity platform to help build higher quality and more durable cyber defense. We remain committed to an open ecosystem platform, superior technology, and earning customer trust through transparency. We outperformed on all key metrics, including record margins and profitability. We continue to lead the industry in terms of technology, revenue growth, and margin expansion. Q2 marked our 12th consecutive quarter with double-digit operating margin improvement. We continue to invest in innovation and scale, which will extend our competitive advantages and reach over time. Based on stronger execution and business momentum, we're raising our revenue outlook for fiscal 2025. So the $100,000 or more ARR customers increased 24% year over year, and I believe 3 to 4% quarter over quarter. Annualized recurring revenue increased 32% year over year, while revenue increased 33% year over year. As for gross margin on a GAAP and non-GAAP basis, like they said, margin expansion is continuing here. Non-GAAP 80%, GAAP 75%, that's up from 77% and 70% same quarter last year. As for operating expenses as a percentage of revenue, GAAP and non-GAAP, both of them have decreased year over year. And so if we look at operating income, here again, GAAP, non-GAAP, we see some improvements there. Why is that? Well, pretty simple. If your revenue continues to grow and accelerate and operating expenses as a percentage of revenue continues to come down and grows, well, increases slower than revenue, then this is exactly what is happening. But on a GAAP basis here, EBIT still negative, EBIT margin still negative, non-GAAP, we're getting closer to break even. As for balance sheet and cash flow, they ended Q2 with approximately $1.1 billion in cash equivalents, and investments. Our strong balance sheet provides flexibility and support to drive sustainable growth while delivering meaningful margin expansion. They can buy other companies, invest, etc., etc. They've got the cash. Net cash provided by operating activities for the 3 months ending was $2 million compared to net cash used of $12 million a year ago. Free cash flow was, in this case, it's not free cash flow positive, negative $5 million, but an improvement from $15 million a year ago. As for the outlook, so they expect Q3 fiscal year 2025 revenue to come at $209.5 million, non-GAAP operating margin of 79%. As for the full fiscal year 2025 guidance, they expect revenue to come at $815 million. I believe the expectations were around 813 or so. So again, a small beat, but not by much. Non-GAAP gross margin also at 79%, and non-GAAP operating margin still negative 5 to 3%. And so looking at the graph right now, still down at the time of filming this, still down, but since that August 5th crash, right, that Black Monday, the stock did rebound around 31% or so. Nice rebound as well since those lows back here in May when they reported their previous earnings. So the stock is up 72% since. So overall, nothing much to add, right? A good quarter, solid execution. I just want to see what they mentioned during the earnings call, whether maybe guidance is a little bit sandbagged, what they're seeing in the horizon. I'll let you know in just a second. If nothing gets added, well, this is the end of the video. Like, subscribe, do all of that. And I'll see you all in the next one or in a couple of seconds. All right, so we're back. Couple of comments from the earnings call. They did talk a little bit about, well, impact on guidance and stuff like that. They did throw a lot of shade towards Crowdstrike, the outage, the way that they're actually, well, deploying these updates, etc., how their architecture is really not up to the standards of today's world, blah, blah, blah. So throwing a lot of shade. You talk the talk, you have to walk the walk. Now, they did say some things about, well, clients that potentially might come to SentinelOne. These types of things do take 9 to 12 months because, of course, they're not just going to leave CrowdStrike today and then join SentinelOne. No, these things take time. So yeah, guidance is not really dependent on what's been happening since that outage. So maybe that's why we're not seeing a huge increase there. But I would assume, based on what they said during the earnings call, I would assume that growth should continue for this company. It's not a cheap one, but it's a fast growing one. So that's about it. Now I'm officially going away. Like, subscribe to all of that, and I'll see you all in the next one. Bye bye.